Accounting equation. Assets equal liabilities plus capital. An asset is a resource owned and controlled by an entity expected to bring future benefits. A liability is a debt owed by an entity resulting in future payments and loss. Capital is money invested by the owner expected to bring future benefits. Now, we will be looking at a bakery example. Lisa opens a bakery. She deposits $10,000 of her own money into her new bakery. The $10,000 Lisa is depositing into the business is known as capital, so capital increases. Now that the business has $10,000, this money is known as the business's asset. So here, assets, which is the cash, increases by $10,000. Lisa buys an oven, a mixer, and baking trays for $3,000 in cash. Since cash is a current asset, it decreases. Equipment, which is a non-current or long-term asset, increases. This means there is no overall change in the accounting equation because one asset, cash, decreases by $3,000 while another asset, equipment, increases by $3,000. Lisa buys inventory. Ingredients like flour, sugar, butter, and eggs on credit. That means she's taking the ingredients now but will pay later. The total cost is $2,000. Since she's not paying right away, two things will happen. One, her assets increases because she now owns more inventory. Two, her liabilities increase because she owes the supplier money. Now let's update the numbers. Before buying, Lisa had $10,000 in assets. With the new inventory, she now has $12,000. But she also has a $2,000 liability, which means she now has debt. Did capital change? No. Lisa didn't make or lose money. She just got inventory on credit. So the key lesson is buying on credit increases both assets and liabilities by the same amount. The amount she owes is recorded as accounts payable, and the supplier she owes is called a creditor. Capital stays the same in this case. Lisa sells baked goods for $1,500 in cash and uses $800 worth of inventory. The transactions are recorded as cash increases by $1,500 while inventory decreases by $800. Now, as you can see, this transaction will most likely bring about a profit, since $1,500 from sales minus $800, which is the cost of inventory used, equals to $700 profit. So capital increases by the profit of $700. This is a summary of the bakery example we just did. Feel free to pause the video and review what we covered. Now, let's do some practice questions. What I would like you to do is pause the video and attempt these questions. Then, we can go through each one of them together, one at a time. Choose the correct classification for each item below as an asset, liability, or capital. This question is pretty straightforward and tests your knowledge on assets, liabilities, and capital, and if you can identify them. I covered the definitions at the start of the video so you can review them if needed. Number 1. John starts a business by investing $8,000 in cash. What happens to the accounting equation? When John invests $8,000 in cash to start a business, assets increase by $8,000 because the business now has cash. Liabilities stay the same because there are no debts yet. Capital increases by $8,000 because John has invested money into the business. This means the business has $8,000 in assets, which is the cash, no liabilities, and $8,000 in capital, which is John's investment. So the answer will be A, assets increase and capital increase. Number 2. Sarah buys equipment for $2,500 cash. What happens to total assets? When Sarah buys equipment for $2,500 in cash, cash decreases by $2,500, but equipment increases by $2,500. Since the total value in assets stays the same at the end, there is no change in total assets. Therefore, the answer is C, no change. Number 3. Lala purchases inventory worth $1,800 on credit. What happens to liabilities? When Lala purchases inventory worth $1,800 on credit, inventory and asset increases by $1,800. Liabilities, accounts payable, increases by the same $1,800 because she owes money for the purchase since she bought on credit. The answer is C, increased by $1,800. You guys can attempt the last 3 questions on your own. Remember to pause the video and try to work them out before checking the answer, which will appear shortly after each question. It's only 3 questions, so good luck. That wraps up our lesson on the accounting equation. We covered the basics, worked through some practice questions, and saw how assets, liabilities, and capital all connect. Keep practicing and soon this will feel like second nature. If you found this helpful, be sure to review the concepts and try more questions on your own. Thanks for watching and see you in the next video.